Crypto markets falter as selling pressure returns at key resistance levels. Long-dated calls get sold as traders throw in the towel on bullish views after a poor August and weak seasonality in September. The US election debate coming up, scheduled for next week, starts to show up on the vol surface. All that and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave in the studio again after a nice Labour Day long weekend. How you doing?
Yeah, I'm not bad. Frustrated, I guess.
Yeah, they keep smacking it back down. Every time we think that, it's game on for the rally and all the stars are aligning, they smack it back down. What's that about?
Well, I think last week, I'm always conscious of like quarter ends. They tend to be like, it's all about positioning and just managing of positions. They tend to be negative from a liquidity point of view, just because you see banks start to kind of reduce lending and stuff like that. So they all sort of window dress balance sheets and stuff like that. So
because reporting is done like a monthly basis.
Yeah, exactly. So they like repo books and all that stuff. They tend to just bring everything back, window dress. So it tends to be negative liquidity. I always tend to think, despite all the FX models, I tend to think it's typically positive for dollar because everyone comes back to dollars.
The dollar did pop from last week.
Yeah. I mean, it's supposed to be that it depends where equities are. Like if US equities are much higher, then the actual hedging means you need to sell out some of those sort of dollars and stuff. So you'll have all these models saying it's going to be dollar negative into month end and that. But no, so I think like that's negative from a liquidity point of view. Still a little bit in the summer doldrums, but it was disappointing after we had the post JPAL pop. And then we've kind of given it all back, and now we're just back in this 58, 62K range. So after looking promising, we're kind of back in that range, waiting for a spark to kind of hopefully give us some momentum higher.
The next sort of macro catalyst, we've got ISM today and Thursday.
Yeah, and I guess non-farm's going to be the big thing.
Big one.
I mean, the data last week, again, very in this kind of Goldilocks sort of phase of we had better GDP data. So Q2 GDP was revised from 2.8 to 3%. Inflation was pretty much flat on the month. So core PCE, which the Fed look at, came in at 2.5%, which was a tick lower than what the market was expecting. So kind of softer inflation, better growth numbers, Goldilocks. So I still think that probably bodes well for broad risk. I don't see any kind of big banana skins. Got through NVIDIA. Is that the most important stock in the world right now? Those results, I mean, I think you saw a little bit of seller news type stuff. I mean, results were good, but it feels like now it's not good enough for NVIDIA just to beat expectations. It needs to absolutely smash them. And we just saw a little bit of selling of that. But again, that story just looks really good.
The euphoria has kind of been taken out of the AI trade, right?
Yeah.
But that doesn't mean it's like a bad trade. It's just not going to go at the rate that it was going.
No, exactly. But everything you look at, I think people find it hard to price an exponential trend and a secular trend like AI is, and because the more it gets used, the more, again, you've got that exponential impact on technology. That then means there's an exponential demand for what the likes of NVIDIA are producing. So
I saw the numbers for ChatGPT's users hit 200 million or something. Right?
Yeah, I mean, it's just
and
staggering.
When was it released? How long has it been since it was released?
Yeah, oh God, was it like 22? Was it?
I'm not even sure it was.
Yeah, I only say that I saw
early last year.
I saw on Twitter today or X, someone from there saying about when she was kind of demoing it to her mother, and her mother She said, I can ask it anything, and she asked, when, and I forget what her name was. Apologies if she's watching. But when will she get married?
Amazing. I bet it had an answer. I bet it had some kind of convoluted answer as well.
Yeah.
What I find interesting is like how people that I know who are really utilizing AI and stuff, they're kind of getting it to write code for them, right?
Yeah.
They're getting it to automate a lot of the tasks that they were doing, because you can automate a lot of stuff with coding, but if you're not that good a coder, it's hard, right?
Yeah.
But this is kind of bridging that gap between people who were good coders, who weren't good coders, but had loads of things that they would like to automate and fix. So it's like, it doesn't replace everyone. It just makes the people who know how to harness the power of it ridiculously efficient, right?
Yeah.
So it will displace some jobs. It will basically displace people who are too lazy to kind of learn how to, embrace this sort of this new technology, right?
Yeah, but it should be a huge boon for like productivity.
Massive.
And I always think with this stuff, like you have all this like hyperbole around, it's going to like put everyone out of work. But again, throughout history, you have these like technological shifts, and it just creates new opportunities and new types of jobs. I mean,
prompt engineers.
Yeah, and I say I'm very, I have a very kind of optimistic take on it in terms of like what it's going to allow. It's going to allow people to be creative, and there's a lot of like boring jobs out there that pay you a wage, but really it's going to force people to go and be a little bit more creative around things, because if you're doing something that's very kind of manual and almost like data input type, well, that's not going to be needed anymore.
No, exactly.
But what it does mean is someone can set up a business, and all the kinds of people you'd need to bring into that business, a lot of it now you can probably have AI run a lot of those sort of areas of your business. So it's really exciting in terms of what you're going to be able to create and do and scale. So yeah, but
we've so kind of digressed a little bit on the AI chat, but like, and how can, let's reposition it back towards crypto though. So where do you see like how the merging of crypto and AI, and have you got any sort of insight into that? Like,
I just think they complement one another, right? Because the more we have like AI running things, the more like automated processes you're going to have, and I think the more it sets up for like not just digital forms of exchange, but sort of those decentralized like automated forms of digital exchange. I just think it's just a complement. They just feel like sort of natural dancing partners to me. So yeah, was it Coinbase have done something now? They announced the other day. I need to read into that, but I just think they kind of go hand in hand with a move towards tech, digital, and sort of decentralization, because again, we're taking people out of the process, right?
But it's not the number go up story of crypto. It's the real building the infrastructure, building the foundations for a new sort of type of financial market, basically, right? Like where everything is just automated and kind of, you don't have these settlement lags and stuff like that, right? So
yeah, exactly. And it always brings me back to a conversation we have about us being so early in all of this. We obviously as traders, like you're naturally kind of all looking for number go up. You get all this FUD around like some of these corrections, and you're like, but the story continues to build like beautifully. We mentioned obviously we've got the presidential debate next week, which is a massive point for the market.
That's the near-term catalyst, right?
But the fact that it's become a big point of focus for crypto just shows how much it's entered like the main the narrative, and it's now a political issue. It's now kind of front and center of an election campaign in the US. It's huge.
Yeah, what's interesting? It's like equity markets, it's not always clear what to trade in equities to have a view on who's going to win the election, right?
Yeah.
So I almost feel like people who kind of want to trade their election view, they've all now just realized actually there's no point trading stocks to trade our election view, right? Let's just trade crypto because that's going to have much more beta to it if we get our election view right. So I think crypto has become the asset class that is going to reflect the election odds moving one way or the other much more closely.
Yeah, right? and it's interesting, like actually like Polymarket, I think Trump's now at like 51%. I think
it helped with the RFK. the RFK
Yeah,
Jr.
yeah.
news last week.
And I just think she kind of peaked, right?
Yeah.
And we'll see how it evolves. Next week's going to be huge. But again, it's the conversation last week with the guys that we had on talking about dollar MEX and so they again remember the 2016 election campaign and the Mexican peso because of Trump's rhetoric. We're going to build a wall and Mexico are going to pay for it, and the whole reshoring of industry and all that sort of stuff. Mex was the Mexican peso was kind of the barometer of how this election was going, and that's what everyone was kind of looking at. Oh, Mex is stronger. Oh, Trump's behind. Or now it's selling off. Trump's poll numbers are looking better. I feel like Bitcoin is kind of becoming that barometer now. That just given obviously how explicitly supportive he's become on Bitcoin and broader crypto.
Yeah. Although the latest drop, I suppose, if Trump's odds improved in the last week, crypto should have rallied on that, but it had a rally, but that got faded.
Yeah, right? and this is my point on the month end thing. I wrote in my newsletter on the weekend, like I think we'll see over the next 2 weeks, how things are really shaping up. You have to kind of ignore the month end noise, and it is always noise. I saw Arthur Hayes was writing yesterday about the increase in the RRP. This reverse repo facility we've spoken about before, which is basically where banks, money market funds can park cash overnight.
So if that grows, then that's liquidity coming out
of the market. Yeah. So we've had like this huge drawdown over the last sort of year or two on the RRP, which I've written about lots of times and we've spoken about. That's actually been really supportive for liquidity and for Bitcoin. That built over the last week. Now, Arthur Hayes is pointing out the fact that the reserve repo rates are now trading sub where the treasury bill rates are. And it's kind of, if you're a money market fund particularly,
there's a lot of those.
Yeah, there's a trade-off between, well, like I'm only going to be in short money market instruments, so I either get the higher yields in T-bills, or I can just park it at the Fed and earn the RRP rate. So given that's above, he's saying, well, there's signs that people going back to the RRP and coming out of the bills. My only thing on that is, number one, say month-end window dressing, you tend to see that build in a way, and it's usually because of the banks. The banks are where they'd be invested in other sort of riskier stuff. They come back to that safety, which is sort of less costly.
If you see that build normally into month end, when do you see it reverse back again? The following week?
You should see it, yeah, this following week.
So we'll know if
done that now, they then like it kind of impacts what they get charged for their balance sheet usage and all that stuff. So now once they pass that comes back into the market. So you should see that. My other thing as well is once the Fed cut rates in a couple of weeks' time, the RRP gets cut with that, so that will fall. And then we've got still a shit ton of treasury bill issuance to come throughout the next quarter, which again is how, it's kind of how that the treasury are funding this deficit, kind of doing a form of yield curve control almost by weighting it to the front end to bring all that cash into the market. So I don't think it's like a big concern of mine. I think we'll still see that RRP get drawn down. We'll see this week how that evolves and whether Arthur Hayes is right.
So
I think it was like this month end.
Is he calling Bitcoin lower on the back of that?
He's saying, which I agree with him, that's probably what's kind of dented things post Jackson Hole.
Okay.
And I think he's threatening about the fact that if that continues to build, then that will continue to weigh negative liquidity, weigh on Bitcoin. He'll be correct if it continues to build. I'm just not convinced it will, because we'll see this week. I think you'll see that start to come down as banks put money back into the market. And then, like you'll start to see Fed cut, RRP falls, and then with the treasury bill issuance, they should always, in theory, be sort of trading at a premium, which will keep that money sort of drifting into that market. So I'm not worried about that. And that's why I think it'll be interesting in a couple of weeks. Seasonality aside, which you mentioned.
Sep's not normally a good month for Bitcoin.
It's not, no. Although
it's not a good month for the NASDAQ either. Yeah. Normally.
But a couple of things that last year was good for Bitcoin. So there's always exceptions. And as someone like, particularly from an FX background, seasonality was always quite a big thing. And I always used to think it was rubbish most of the time, unless there was an actual reason for it. So like tax months, for example, have a clear like impact of, like from a seasonality point of view. we saw that in Bitcoin a couple of months ago.
Yeah,
Because
I'm not
people
sure
a for they need to sell and pay capital gains and all that sort of stuff and manage sort of some of their tax. And then also, again, you talk about liquidity. You tend to find obviously that as people pay back tax, the Treasury built their cash coffers, so they're not issuing so many bills to draw out that cash back into the market. So it's kind of just taking money out.
The year-end rally. The year-end rally in equities is a strong seasonality, right? Like November, December. The odds of it rallying in that period is so high. So I think seasonality isn't complete rubbish in general, but I would say looking at every single month and saying, oh, seasonality for this month is X, and just like hanging your hat on that, I think that's going a bit too far. In terms of what I'm seeing this week in the options side, so we've got, obviously we had a bit more movement. Realized vol popped by a good 10 points on Bitcoin and even more on Ethereum. Ethereum's trading quite weak on a relative basis. It's still kind of hugging the lows of the recent range in terms of the ETH Bitcoin cross. Front end vols held up okay. Not collapsing. We already got a very steep curve with the November bucket, the 8th of November that they've listed for the election. That's still holding a hefty premium, so implying well over a 10% move on the day. Finally starting to see a little bit of a premium on 13th of September, so next Friday, because that's going to capture the debate. So I wouldn't say it's massive, that premium, but we are seeing a slope between, say, this Friday and next Friday. Maybe a bit bigger difference than we would have seen otherwise. So that might start to actually gain a bit more traction as we get throughout the week, and the premium of those options decays, and people will be like, I want some cheap optionality for the debate or whatever if it's available. So I think we're probably likely to see some buying flow towards the end of this week, maybe even over the weekend, to get in front of that election debate. So I wouldn't be surprised to see like call buying for people, because you're probably going to see, I suspect you're going to see more of a reaction on the upside if Trump just kills it in the debate like he did against Biden, right? Now, I don't think he's going to necessarily do as well as he did against Biden, but that's, for me, I don't think, we've already had a bit of weakness in Bitcoin. We've already had Kamala kind of come in there and basically suddenly even it up 50-50. So if she does well in the debate, that's kind of expected that she's going to do all right in the debate, I think. I feel like what's not expected is that Trump does materially better than her. And if he does, then that's probably new news, and therefore I think we will get a reaction in crypto.
I think as well, like I think we mentioned last week, that there is in my mind like an asymmetry to this, in the sense of like Kamala doing well and Kamala winning and becoming president is status quo. So it's not great for crypto in the sense of they've obviously, their administration's being quite aggressive towards it. Although again, signs that that's softening, but she's like the kind of the status quo, and then we can look to all the other stuff. Whereas, Trump, we feel at least has this, he's like the ultimate, like, okay, he's going to Bitcoin reserve and all this stuff. So he'll be super friendly. At least that's what he's saying towards crypto. So he's like God, we could accelerate on that. She's like, well, we're just where we are. And then we're back to looking at Fed and macro and all that sort of stuff. So yeah, I kind of feel she does better. We will go, oh, disappointing. And we're back here in a couple of weeks going, oh, we're still in this 58, 62K range. He has an absolute flyer and his odds start shooting up. Then we'd probably sitting here going, oh, we're at 70K and are we going to break the highs, and having that conversation.
Yeah. So before we move on to this week's guest, don't forget to like and subscribe so this video can get passed around and people can learn more about what's going on in crypto options and macro, to be fair. Okay, so our guest this week was Ash Ashmawy. He founded Kemet Trading. That's a institutional crypto infrastructure platform which allows people to trade, risk manage, analyze markets. I mean, he is building some seriously heavyweight tools over there. So have a look what he had to say. Okay, so we're here with our special guest on the podcast this week. I've got Ash Ashmawy here from Kemet Trading. How are you, sir?
I'm good. Thanks, Imran. Appreciate you guys having me on this episode. And hopefully we can delve into some good conversation.
Yeah. Great to have you on, mate. So tell us, as I always ask on this podcast for new people, tell us a bit about your background, how you got into crypto.
course. So I mean, I basically prior to Kemet, I've spent my entire career like building trading infrastructure for TradFi. I'm a comp sci graduate from the University of Minnesota Twin Cities, graduated in 2015. And quickly started sort of my career into the financial industry. I was on the reliability engineering team over at the Shaw in Arcesium back in 2016 till the late 2018, and then
For those who don't know, D Shaw's a massive vol trading house, right?
it's a massive house period across everything at this point.
Well, not just options, but
Yeah, and it's a
multi-billion-dollar hedge fund, right?
absolutely, yeah. One of the biggest like hedge funds out there today. And then post my time there, I moved over to a company called TradeWeb. So TradeWeb is one of the largest fixed income like dealer networks on the planet today. I joined as their global head of cloud, where I was basically overlooking their cloud infrastructure across APAC, North America, and Europe. Had an incredible time over there. And then, I moved on from there to Kemet, started building Kemet in December of 21. And the rest is history.
And Kemet's your baby. You're the founder and CEO of Kemet, right?
Yes. Yeah. I mean, I guess maybe one other piece to add, like, since you mentioned like how I got into crypto, like my first experience with crypto was back in 2014.
Lucky you.
That was it was fun. Ethereum was really the reason that got me into crypto in the first place. The idea of a decentralized compute platform was incredibly sort of appealing in my mind. And as I mentioned, I come from a very technical background, and just the thought of a global decentralized compute platform that could basically at some point in the future kill any cloud providers and compute like centralized compute parties was a very just appealing thought if it becomes true. And then from there I kind of really went through the rabbit hole with with my profession and sort of like the intersection of building trading infrastructure and being very much mesmerized by crypto. Eventually sort of Kemet became a reality because I think that really meets both of those interests and where we're trying to solve for.
And you took the leap of faith, starting your own business back in late 21. You said, yeah.
Yeah. So December 21 was when I started building. It was back. Yeah, I look back. It was it was definitely a crazy move. I had just gotten married in July of 21, and I a lot would consider that I've experienced a lot of success in my career. So for me to kind of just like throw all that and like really build for the digital asset space and kind of leave TradFi and come into the space is also not just into another opportunity, but to basically build something from scratch was kind of madness. But I would do it all over again, honestly. And
yeah, I got a lot of respect. A lot of respect.
Thank you.
Yeah, I mean, it's a hard thing to do, man. Like your TradFi career, you're earning decent money, building infrastructure for some of the biggest hedge funds in the world, and then to just like roll the dice with your own thing, it's a struggle. I mean, I've done it in a very different capacity to you, but been there, mate. So a lot of respect for you doing that in the first place.
Thank you.
So, okay, great. So why don't you tell us now a bit about what Kemet actually does?
Absolutely. So at Kemet, we're building a pure technology offering, which we believe is sort of like the first of its kind to enable institutional participants to manage the full trade life cycle of today digital asset derivatives. That's what we really, really focus on. We do support spot as well, but our bread and butter is sort of focusing on derivatives because we believe a couple of things. One, that's a necessity for any sort of major financial institution to be able to maneuver this kind of financial ecosystem is to really have access to derivatives for whether it's leverage or hedging and risk management. And by nature, they're instruments that are built specifically for institutional sort of scalability, right? And two, we genuinely believe that this is the future of financial markets, and as such, we believe patterns kind of like repeat themselves. We think derivatives are going to be experiencing a massive growth spike, which in turn would require adequate infrastructure in order to actually become true. We think we're one of those parties that are going to be helping that, sort of movement and that growth on the institutional side. So, that's really what we're building, right? So Kemet is an end-to-end solution for managing the trade lifecycle. Our offering can be sort of summarized into a PMS, RMS, OEMS, all sort of bundled together.
For those who don't know those acronyms, well, you mean basically you can analyze the market to decide what trade you want to do. You can then execute those trades, and you plug into whatever accounts that you already have at the existing brokers. And then once you've done those trades, you can risk manage those trades, throughout the life.
Across their life cycle. Absolutely. So, PMS stands for Portfolio Management System or Position Management System. OEMS stands for Order Execution Management System, and RMS stands for Risk Management System. All three of those together sort of are, the operating system for managing, trading activities across any given financial market. What we are doing is building that for the digital asset space, specifically focused on derivatives. And the intention behind Kemet is to be able to communicate with any liquidity venue, regardless of their infrastructure setup. So as you and probably a lot of your audience are aware, right? Like there's a lot of fragmentation in the digital asset space. For any given party, you're talking to potentially maybe an exchange. You're also talking to an OTC desk. An exchange can be centralized or decentralized. It could be a protocol. And every single one of those exchanges, even if they fall within the same, category, they all sort of also have full autonomy on how they represent their data, how they build their APIs, how they set up their matching engines. So there are all these different, playbooks and rules that you kind of need to, understand before you even get a chance to deploy and get some kind of edge across the market. When you start sort of expanding that across, 5, 6, 7, 8 different counterparties, and you want to do that at scale, you're already trying to, manage $1 billion worth of capital. It becomes an incredibly complicated thing to do. And we're trying to kind of make that very much as streamlined as it is today in TradFi, by offering this gateway to our clients in order for them to not really have to think about how all this stuff works, but only focus on what matters the most, which is generating alpha and basically making returns for their investors.
And your clients would be these big hedge fund types in crypto land, or also? We
welcome any institutional participant to leverage our solution. We believe it's, it works for quite, the majority of all institutional participants, regardless of their sort of role. We're definitely a lot more aligned with buy-side institutions, but that doesn't mean that we don't have some folks on the market making side that are leveraging our algos, for example, on options. So we definitely welcome any institutional participant to at least explore how to look at this market, through our lens, because we believe that we built something that's quite incredible.
Nice. And you showed me a little bit of the platform earlier. So why don't you tell us a little bit about what features, some of the features that Kemet has that you don't think anyone else on the street has actually got and make you really stand out?
Of course. To start off, I think just the fact that we've bundled all three of those in a single sort of streamlined solution is something that is on the path to something that is unique. I think that's something that a lot of folks would agree on, like sort of in the industry, like, the holy grail is like really that one-stop shop, right? A lot of
like the Bloomberg, it's like the Bloomberg of TradFi, right? But the Bloomberg of crypto, maybe.
To some extent, but I mean, Bloomberg also would be a lot
on their media and news as well.
On the data providing, right? But the hopes is that, like, because obviously when you think of this from a business operating perspective, right? You want to minimize the number of parties and vendors that you're dealing with. Right? You don't want to have, let's say you're a shop of like 30, 40 people. You don't want to have 12 pieces of software that are all required to kind of just do your job every single day and then figure out how to make them all talk to each other. And that kind of tends to be, the norm, right? Like, you're going to get your OEMS from someone, you're going to get your PMS from someone else, you're going to get your risk management. Maybe you're going to build something in-house or you're going to get something from someone else, right? But then at some point, this sort of chaos really sort of slows you down, right? And then can make things very, very hard as you try to scale. Our hopes is that we're building something that is very laser focused on what we believe the next growth cycle is going to be focused on, and that it works out of the box, right? Works end to end, truly end to end. So we think that's definitely a big sort of value add where we give our clients this, like, it's a white glove like sort of service, and it works, as I mentioned, end to end. You don't have to think about things outside of Kemet. In terms of like specific features within a product, right? Now I don't want this to be a conversation specifically around Kemet all the time, but obviously one thing you and I were looking at right before this call is, for example, our algorithmic execution, especially on the option side, the ability, for example, to trade volatility, right, which we believe is incredibly crucial as you scale, and we believe is something that a lot of people are going to be very, very keen on having that capability within their operations. Kemet today gives you the ability to trade volatility like no other, right? You can basically decide, that you'd like to accumulate a certain amount of Vega. The product will figure out and identify the legs that match your criteria based on your controls. If you decide that you want to trade volatility within a specific strike range, not only are you going to be able to do that, but also the way of accumulation is very, very sophisticated way that you can leverage your algos, where you can basically decide to target a specific target on the order book for every individual leg, with individual offsets, while iceberging execution, in addition to the fact that you can also attach another algo to that run, essentially delta hedging yourself in real time. So the ability to do that all together in real time is something that we believe is incredibly powerful, and we believe no one else is able to offer today. For the very simple reasons that for the past couple of years, our focus has been on building a truly unified data model and coming up with a user experience that actually matches what we believe is the use case, right, for a lot of the traders in the space. This is a very volatile asset, and it makes a lot of sense to be able to trade volatility, right, the way you should be. Unfortunately, right, due to the nature, again, as I mentioned, of this ecosystem, right, a lot of the infrastructure is still very, very far behind. So to come up with a solution and build something that allows you to do that effectively at scale is incredibly hard. We think we've been able to unlock that, and so far for some of our clients, it's been one of the most successful features that we've delivered.
I mean, I was amazed by it, because I'll be honest, I worked for 3 banks over my career of 20 years, and I traded equity derivatives, and I didn't even have any algos sophisticated enough to do some of the stuff you're doing there, right? So obviously, I'm assuming people like D. Shaw probably did either build those in-house algos themselves, or they had third-party solutions to do stuff like that. But most of the banks, most of the liquidity providers didn't even have those tools at their disposal.
I mean, which sounds about right? I mean, there's a reason why Shaw or Citadel or Millennium, every single year, are just printing money. It's the technology is an edge, absolutely, right? I mean, in TradFi, it's definitely an edge, right, with a lot of competition now. But in crypto, given the nascent nature of this industry, technology can be an absolutely an absolute game changer, right, for a given party, right? The vast majority of this industry is still very, very far behind. You'd be surprised that offices and hedge funds that are managing multi-million-dollar funds and they're managing risk using Excel sheets.
Because the way they see it is, we just need to be long. We don't need to really generate real alpha right now because it's too nascent. And as the money comes into this and it turns into a God knows how many trillion asset class, just being in the space is enough, right? That's
which has worked for a lot of people, to be honest, right? But now I think the narrative is definitely shifting, right? With everything that has happened over the past couple of years, right? Whether FTX and then this year with all the ETF sort of approvals, you're seeing that truly institutional participation is kind of increasing, right? Day after another. It's very clear that there's a clear mandate for the vast majority of TradFi institutions to kind of at least have a clear plan of how they're going to be approaching this. And that by definition sort of changes the world of games, right? If before you were able to do a bunch of things and, really make money, hand over fist overnight, while simply just click trading on an exchange's website, You were probably able to do that again because the number of participants was very low, and the sophistication around their operations was also not there. But as this sort of space matures, technology is going to become increasingly sort of a clear defining edge, right, for a given part of this. And unless you have the capacity and the funds to be able to attract engineering talent that know how to build this kind of stuff, which you and I know very well, like it's very hard. It's very hard to build this kind of stuff, and there are very few people that are actually able to do that stuff. You're constantly going to be falling behind. Like, and it's important to be able to work with a partner that can provide you with that edge, if not better, to be able to compete as this ecosystem matures.
Yeah, I hear you. Yep. If I was at a crypto fund, mate, I would be giving you a call. But what else? So you're in an interesting vantage point in the industry, right? Because you don't actually trade yourself. You provide infrastructure for traders, for institutions who run risk. But are you seeing any common sort of pain points for your clients that you're obviously trying to resolve?
Absolutely. I mean, across the board, honestly, I think there's also a clear gap within the prime brokerage space. I mean, especially since we're like within the derivatives end, right? Being able to manage collateral in sort of a meaningful manner across like a variety of different counterparties, that's still an unsolved problem per se. And I don't think like technology alone is going to be able to solve all that, right? Like there's the space definitely needs more prime brokers that know and understand how this game works and are able to provide services to the clients at the same scale they're to provide that within the TradFi space. In addition, obviously the regulatory spaces seems to be sort of a question mark, right? Especially onshore. Now the good news is that offshore things that seem to be moving like way faster, right? Like if you look at the UAE, if you look at Singapore, right? Like OKX now just got fully licensed in Singapore, right? Like things are definitely moving towards the right direction, and there are sort of spots across the globe that are very, very friendly, for crypto funds, right? There's also, you see that exodus of like, multi-billion-dollar like hedge funds opening HQs in Dubai. It really isn't a coincidence, right? Like now, obviously there are a lot of variables, not just crypto, that would involve that kind of decision making, but it's definitely is, part of that reason why some of these funds are opening shop over there, to kind of be able to have an operation that is able to touch this asset class and really scale without the hurdles of regulation here. I think overall, like the counterparty risk problem is getting less and less of an issue, like it used to be like a couple of years ago. There are the remaining players in the space, seem to have their shit together per se, and like seem to be able to like really withstand, the scrutiny of risk management and, being solvent and being a lot more transparent. And I think that's a great sort of step forward for the entire industry. And moreover, right, I think what really excites me is sort of like where we're going to be heading next, like post this presidential election, right? I think both candidates have clearly expressed like, to want to work with crypto and like want to at least push this industry forward and like stop whatever.
They'd be mad not to, because like,
yeah,
other countries are going to, so they either want to be left behind or do they
we're already behind, right? So at this point, we're pretty behind, but hopefully like, at some point it's still, possible to get back on track and really lead. At the end of the day, the US like economy is still the, largest economy in the world. And it's a force to reckon with, right? Like, so, even with how slow things seem to have been on the crypto side, I still believe the US is going to be the absolute top defining player within the crypto space, like in the next like decade. It's just right now seems like we're just moving a little bit slower than we need to. But yeah, I mean, generally speaking, right? Like there's a lot of things to be excited about. I think also options on on the ETF, or like ETF options as start like showing up. I mean, the other week, right, NASDAQ announced like their intentions to seek approval, right, like for Bitcoin options on on their ETF, right, listings to track the index. I think that's going to be incredible. I think that's going to unlock massive opportunity and massive flows into the industry, right? Like, because, really we need those, right? Like, this is a vehicle that is incredibly critical for, not just hedging, but just for various reasons, right? Across like the institutional use case. And I think once those get unlocked on regulated venues, you're going to start seeing inflows like really sort of going up high. That's something that we personally at Kemet are incredibly excited about because of our ability to kind of maneuver options. But also more importantly, we're excited about just for the entire industry because we think that's going to bring in a lot more players into the space and a lot more institutions coming in and actually, providing value for the industry.
So you obviously plug into the exchanges with your infrastructure. What about if someone's got a load of OTC positions on altcoins and stuff like that? Do you provide the ability to see those positions and manage those positions inside the platform?
Absolutely. So that's one of the use cases that we've thought about like from day one, right? Like, so, I mean, we can't really effectively, given the fragmentation of this space, to at some point say that we connect to everyone and every person on the globe, right? So there have to be a way to kind of be able to at least manage your positions, against, OTC counterparties and that, again, it might not be, even when you say OTC, like people start thinking like, whatever or Cumberland, right? There are OTC trades that are happening against counterparties that just simply don't have anything. There's like trades that are happening over Telegram and they are happening in like, amounts that are worth, keeping track of and actually managing. So, within Kemet today, we do have, the ability for you to upload manual trades and book trades in real time against any counterparty, whether that counterparty is supported within Kemet or it's a counterparty that you just can create on the fly. And then the system is able to actually build your position trade by trade in real time and give you that view within the PMS.
And can you monitor what your counterparty risk is to those like random manual? Okay.
Absolutely. In the same manner that you would be tracking your counterparty risk against an account on Deribit, you do the exact same against counterparty Banana, right? Like who's OTC. So.
Yeah, amazing. All right, it sounds really good. Any sort of closing thoughts you want to leave us with in terms of how this industry is moving, and what where the big opportunities are? I mean, clearly, I think it's clear where you think the opportunity is, which is why you founded Kemet. But any closing thoughts you want to leave us with?
I mean, I think it's important to also like keep an eye on like EMEA, right? Like, and especially the UAE and everything that they've been doing over there. It's public news, right? Like back in April, like we closed a round, right, with participation from a variety of different players, like Falcon X, Deribit, QCP, but also the lead of that round was Further Ventures, who are anchored by ADQ, right, like and MasterCard. Those are very heavyweight, like hitters in sort of what would be considered classical traditional finance, right? Like ADQ is basically a sovereign wealth fund, but it's important to kind of see that as one of many signals that region is sort of putting forward to really define, sort of their positioning in that space in the future. You're looking at a lot of funds, like Brevin and others that are opening shop over there and really getting close to, ADGM and like having a clear sort of relationship built around those institutions because they see that they are putting in all the effort to really provide a clear regulatory space for that, for crypto altogether. So I think there's going to be immense opportunity over there. I think there's a lot of people that underestimate the sophistication of some of the local players over there, right? Like, some of the regional family offices, some of the hedge funds that are more local, that are based in Abu Dhabi or Dubai, right? It's not the same as it used to be like 10 years ago. There's a lot of advancement on how they view the world, how they want to really manage things, in the best kind of way, and really take the lead across operations and technology. So I would argue if anyone that is listening and is exploring sort of where are pockets of opportunity, outside of the US and APAC, I think, the UAE should definitely be a place, destination somewhere that you should keep a close eye on. Because I think the next like 5 years, we're going to see a lot of movement over there that will probably blow up. So.
Our very own Deribit have moved their headquarters out to Dubai as well, right? So
I was lucky enough to take a look at your office over there. Actually, Luke was incredibly, gracious to show me the office, and I think you guys are definitely where you need to be. So
All right, man. Well, we'll call it a day on that happy note. But really appreciate you coming on the show and telling us about your amazing offering you've got over there at Kemet.
thank you, Imran. I appreciate it. Yeah, have a great Labor Day, I guess.
All right, man. I'll speak to you soon. Cheers. Okay, so yeah, Ash giving us some good insight there into like what crypto funds kind of need in terms of infrastructure and some of the challenges they face and how they're trying to solve it over there.
Yeah, it's interesting. And Joe, it's interesting to me, like, you know, he's got such strong pedigree from the traditional space and what he was building and some of the names that he's worked with. To see those people coming into crypto and digital asset space. Was it Druckenmiller who said about, you know, follow the talent?
It's true.
And you know, years ago, all the talent was going into Google and Facebook and Amazon and all that stuff. And now a lot of these guys are coming to build in the crypto space. And you know, we say we're kind of recreating all those tools and that we took for granted in TradFi or you know were needed. We're now building, so it's brilliant to see. And again, it's just going to accelerate like institutional adoption and just make this space so much bigger. So so everyone stop looking at the charts and where we are. And
exactly.
There's a lot of good stuff going on.
So it doesn't matter which way the price is going. People are leaving TradFi. They are coming into this space and they are building amazing stuff. And I think that's really the main story and the main narrative that we need to kind of zoom out sometimes and realize.
Zoom out, definitely. Yeah.
All right, guys, we'll call it a day for this week. Thanks for watching. We'll catch you next time.